I think gold could get a bit of a lift here, maybe get a new high before the end of the year. I wouldn't get too excited until we get above the new high, which is, I think, 2070 in US dollar terms, and stay there. We've got to stay there for several trading sessions in a row before I'm convinced that we have a new bull market unfolding where resistance becomes support and we're going to continue upward. I believe that will happen. I'm almost certain it'll happen in 2024. I'm not sure how strong gold will be going into the end.
The gold market continues to attract new attention as prices hold above $2,000, trading near a 6-month high. While the market has some significant momentum, analysts appear mixed as to whether all-time highs are on the near horizon. Regarding gold and silver, DavidMorgan points out a 10% rise in gold close to its peak, while silver is at 47% of its high, signaling substantial growth potential. Over the past 5 years, the price of gold has appreciated approximately 36%, while the total return of the S&P 500 has been 60%. Gold acts as a hedge against currency devaluation via inflation, making it a favored alternative asset for wealth protection. Silver experienced fluctuations over the past year, initially dropping to $18 in September, but rallying to a first-quarter high of $24.39 in January 2023. Despite a dip to just under $20 in early March, silver surged to $26.06 on May 4th due to U.S. banking failures, marking its highest point this year. Furthermore, David notes similarities to the 2008 crisis, highlighting a trend of people moving funds from banks due to rising interest rates. Expressing concern for bank liquidity, David recommends precious metals as a potentially safer choice. Crises in the banking sector can have far-reaching consequences. The fear of bank failures can drive investors to seek the safety of assets less exposed to financial institutions. Gold has made considerable gains twice this year, in March during the banking crisis, and again last month at the outbreak of the conflict in Israel and Gaza. While the economic outlook is far from positive, gold would still usually struggle under high interest rates, but central banks and investors have kept buying. Now we present the clips of DavidMorgan's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
So what's interesting, Dunnigan, is what's gone on in the metals this year. We'll start with the precious metals, but gold, the only two that are up on the year are gold and silver. Gold is up almost 10% from the beginning of the year. Silver is up about 1.5% from the beginning of the year. Palladium is off almost 40%, and platinum is off about 12%. I want to expand on that. So gold is at 95% of its all-time high. So it's almost at its all-time. Silver is at 47% of its all-time high. So it's got to double, a little more than double from here to get to its all-time high. As far as the bank run is concerned, that happened in the 2008 crisis. I forget I think it was a congressman, Kosorski or something like that. You may recall, Dunnigan. And there's a video out there still. It maybe have been removed. They talked about the banks are starting to panic because there was an electronic run on the banks. And people were taking their money out because you can do it in many instances if you're on online banking and move your bank funds into, let's say, the stock market or into a money market or into Treasury Now and buy T-bills. And so the banks really panicked in 2008. Well, that's happened again because the interest rates have gone up and most people are getting next to nothing on their bank account are moving into money market funds, which takes them out of the banking system and also into T-bills. I think it's Treasury Now. You can go to and buy it directly yourself. It's not very difficult. So the liquidity of the bank with the deposits of your money that they consider or is legally theirs is shrinking rapidly. And this, of course, is very, very difficult for the banks because most of their securities to back up their business of banking is in 20-year and 30-year bonds that they have to sell at a discount because the interest rates are so high. So to make them pay the 5% that's required for somebody to buy the bond, they've got to discount the bond 30, 40%. And this is huge losses on their books. And so we're in a mess. And, my advice is if you have more than $250,000 in the bank, you should really consider putting that extra somewhere else. Obviously, I think the precious metals is probably the safest. Maybe a second job or something you can do on the side well before you get into gold and silver. And if you have excess savings and you are at a fairly high level, it doesn't have to be above 250,000. If you got 20,000 and you've got, prepped up and you got pretty much everything you need, certainly you can move into the gold or silver market and have that real money outside of the system. Because if the bank freezes up, or there's a bank run, or they reset to a new system where you have to have a real ID, and the only way you're going to get access to your funds in the bank is to let the bank go into this real ID system, where I call it the beast system. You're going to be darn happy that you took sufficient account of what's going on in the future and prepared for that. I'll call it eventuality. I don't know if it'll happen or not. I know what the bankers want. Whether it'll be achieved or not remains to be determined. And I'd say in the long run, we win. But in the short run, I think there's going to be a lot more pain and agony.
During the interview, DavidMorgan explained how banks put immense pressure on borrowers and contribute to economic challenges. U.S. banks reported a third-quarter profit slowdown due to lower non-interest income and increased losses on bank investments. The agency also reported that banks saw their unrealized losses on securities climb to $683.9 billion in the third quarter, a 22.5% jump driven primarily by rising mortgage rates that have reduced the value of mortgage-backed securities held by banks. As David is concerned about individuals facing obstacles in transactions, including online banking disruptions, Bank of America continues to alert online customers that some deposits may be temporarily delayed because of an issue impacting multiple financial institutions. Meanwhile, he supports investing in gold and silver rather than putting your money in banks. Let's get back to the interview.
In the 30s, why did so many farmers and merchants and whatever go out of business? This isn't really well published, but a lot of loans were called callable, C-A-L-L, callable loans. So you were making your mortgage payment. Maybe your grandfather had enough business for a while to make his payment. But then the bank, if it was a callable loan, and many were, say, hey, your farm, and these numbers sound ridiculously small compared to what they are today because I'm doing it on an inflation-adjusted basis, but they called up your grandfather and said, hey, you owe us $4,000. You got 30 days to pay it. And no one could do a callable loan. That's like paying your mortgage off, instantly. I mean, how many people can do that? Very, 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 very few. So that just squeezed the middle class on down in America. So just want to get that out there. So what these banks can do. They did this, in my view, in more or less a deliberate manner. But that's a story for another day. So the question was, what about now? Yeah, I've gotten many instances where people have contacted me and asked, what can they do? Their bank doesn't want to send a wire to Miles Franklin for gold. They're saying that no, and it's their money. Well, that's another story. I mean, the deposit you make isn't your money, and that just freaks people out. But that's the truth. You're an unsecured depositor, and it's the bank's money, and you're giving them a loan. And so, do they have control over their money? And that's a legal question I can't answer. But what I can give you is more than one incident, in fact, numerous, and it's becoming more prevalent, as you outlined, where people call up and they want to wire money, not necessarily for precious metals, for any business transaction, a loan payoff, a down payment on a house, whatever it might be. And these banks are giving a lot of pushback. And it's like, well, what's the money for? They never asked that before. It's like, wire 10 grand to, XYZ entity. And they did it. It's supposedly my money and I want to make this wire. And a lot of the online transactions, HSBC was down for a while. One of my friends in Panama, now whether it was just the Panama branches of HSBC or not, I do not know. I do know he's in Panama, and I do know he sent me a photograph of what the bank sent him, and it's basically can't do anything. We're down for online banking.
Exploring the potential of precious metals as a safer alternative prompts reflection on diversification strategies for long-term financial security. DavidMorgan believes in a new bull market, anticipates growth by 2024, and remains uncertain about gold's year-end performance. Considering the strength of gold and the potential growth in silver, what's your strategy to invest in precious metals in the face of the upcoming banking crisis? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.